And that's if we have time. And if you have any questions, by all means, please interrupt me because I want it to be a little interactive. Because if it's confusing to you, chances are it's confusing to somebody else. And these things kind of build on each other. So if you have any questions, by all means, stop me.
And injecting there, please type your questions into the chat box so that everybody can see them. Go ahead, Voss.
Sure. Okay. So one of the first things you always think about when you're thinking of trading is, what kind of trader do I want to be, or what kind of trades do I want to do? So there are many different strategies you can do, but a lot of them kind of fall into one of three categories. You can either do a pullback, a reversal, or a breakout. So whenever you go to a meeting and somebody's talking about, I got this really nice stock setup, or I've got this nice winner, you can ask them, what kind of setup was it? Was it a pullback setup, a reversal, or a breakout? There's no one way that's better than the others. Each one there's a trade-off in each one. And so let me just go over real quick what are the pluses and minuses of each. Pullbacks are basically pauses in a trend. So basically what you're getting is you've got a trend in formation, you've got a pause in the trend, and the expectation is that the trend will resume and it'll come back to take out its prior high and keep going on. That's what a pullback would be. And we'll get into a stricter definition of it in a few minutes. A reversal is, hey, I'm picking a bottom. I'm expecting the trend to change. And if I get it right, I'm going to win really, really big. But if I get it wrong, I'm going to lose. And the expectation is that a trend will reverse. And most of the time, trying to pick a bottom typically doesn't work. And unless you know exactly how to do it properly, this tends to be a low probability trade. But at the same time, reversals can actually be extremely phenomenal trades because the reward is massive compared to the amount of risk, especially if you nail it. If you nail a reversal exactly, your profit potential is huge. And I usually recommend reversals for advanced traders once you've got pullbacks going. And the third big category is breakouts, continuations of a trend. So if you've listened to Dr. Wish or the IBD system or Mark Minervini or most traders, a lot of them will do breakouts. Basically, you've got a trend and it's kind of pausing, but then it's breaking out into a new high and expecting the trend to continue. And oftentimes people are looking for a high volume breakout at a new high, expecting that to continue on. And so like I said, each one of these has different probabilities and profitability potentials. By the time breakout happens, oftentimes a lot of the gain has already happened. Same thing with pullbacks. The trend has already formed, so you've lost a bit of the profit already. So when it does resume again, your profit potential is limited. So we'll go over some of the other negatives in a few minutes. But what we're going to be focusing on here, is pullbacks. This is our focus right here. This whole presentation is about pullbacks. Now, if you come to the IBD meetup, I do a lot on reversals because the same setup we're going to be talking about today can also be applied for reversals, even though I'm not going to be talking about it today. And when you do it on reversals, your profit potential goes up dramatically. With that being said, let's actually start with the definition of what a pullback is. Basically, a pullback is a pause or a moderate drop in a trend, and you're expecting that the trend will continue again. So it's basically either a retracement or consolidation, and you're expecting a trend to resume. So that's the official definition. Everybody kind of knows what it is intuitively. So let's actually put all of the three categories of trades on a chart, and let's look and see what they would look like. So this is what a breakout to new high would look like. And so typically you have a setup, you got a nice cup pattern, it breaks out darn immediately fails. So this breakouts, and oftentimes when they fail immediately, but when they work really well and they keep going on. So here's another breakout to a new high, and here's another breakout that failed and immediately fell apart. Now these are breakouts. And what's a pullback? Generally, a pullback would be you've got a trend and you've got a pullback in the trend, and a spot like this. This is a pullback right here, and you're expecting the trend to resume and test its high again. So that's what a pullback would be. A reversal, on the other hand, would be it's already come down quite a bit, and then you're expecting it to reverse. And so if you are right on the reversal, your profit potential is huge, whereas your risk is, relatively speaking, minor. So your risk reward is 10 to 1, 20 to 1, sometimes even greater than that. Whereas in a pullback setup, your risk would be the same, but your reward potential is much, much less. That's because most of the trend has already happened, and you're getting the pullback and you're expecting the trend to resume. So that's overall gist of it. Now, one of the things I often stress is that a decent pullback is typically at or near the 200 period moving average. So when Dennis talked about moving averages, he said, these are very relevant points at which people look at prices. And oftentimes they form, like the market's got a memory. It'll come back to a particular point and then it'll reverse at that point. So typically when we're looking for pullbacks, we're looking for pullbacks at or near the 200 period moving average. So these would be pullbacks. But if it goes well below the 200 period or something like this would be a reversal trade. And one of the things we talk about, which I'm not going to talk about here, we talk about in the other group, are these bands. I call this the band 1 line and then the band 4 line. And reversals at the band 4 line are the highest probability reversals. Likewise, when something hits the band 1 and you get a pullback from it, these become really high probability as well. I call these band 1 pullbacks. I'm not going to be talking about that because we don't have time for that, but I just wanted you to be aware of that. One more thing I wanted you to be aware of is all these little dots, and we'll talk about it in a few minutes. And I wanted you to be aware of these lines. We'll go into more detail about what these lines are in a few minutes, but these are all trend channel lines. With that being said, do we have any questions before I move on? No? Okay. So there are pluses, as I said before, there are pluses and minuses to every category of trade. So pullbacks, generally speaking, are the highest probability trade. The reason being the trends typically resume. They don't fall apart just like that. I mean, they typically will form a pullback and the trend will resume. And they're very easy to identify. When you look at them, you see them, you got them. And another big advantage is you're not picking a bottom. Keep in mind, most of the time when you pick a bottom or try to pick a top, you're going to be wrong. So, and you want to avoid doing that, especially if you're new. So the pullbacks have the advantage that you're not picking a bottom, which is actually a big plus. Now, what are the negatives? It's that it's, like I said before, it's not as profitable as a reversal. Reversals are extremely profitable. And the other negative is that it doesn't go in your favor immediately. Oftentimes it'll just kind of go sideways and it'll test your patience and it'll come back to retest your entry point and then it'll go up. So you've got to have a little bit of patience, but typically pullbacks will resume most of the time.